Quant could be in serious danger if we now go ahead and lose this key level of support. So we are on the daily time frame. We're going to go through what could be happening in the immediate short term. So don't forget to like, subscribe, comment, and share this video update. Again, if any of you want to be taught, I've got 2 slots at a discount. So just use the links in the description below. Message me on twitter.com and we'll take it from there. But right now, with Quant on the daily time frame, we are below this wick at $86.64. What I must say though is that this candle had opened above this wick. So we're technically still holding it as support, although we are currently below that support. You would think, oh, it is now resistance. However, as there's 10 hours of the day left, there are still chances of this reclaiming it. Right now, we're having some movement further to the downside. But if you want to invalidate any further downside, we need the daily candle to close back above $86.64 to just confirm this as support. And this would be on the perpetual contract chart on the Binance exchange over here for the Quant chart. So you do have that chance of, again, invalidating further downside. We need to see, as you can see, we've dumped down towards that yellow support as well as the 786. And we know that this is potentially like the last chance of us actually reversing. So basically what we now need to see is before the 10 hours are up, us getting back above that $86.64 level. And the reason for that potential move to actually happen is, again, because we opened above the support. We are currently below with around half the day left, so we know that it's going to be constantly moving over the next 10 hours. It won't be in that exact same spot. And as we've pushed through 2 levels of key support, that is why I think that we need to show a reaction. So if we want that final nail in the coffin to suggest that Quant is actually going lower, then it actually needs to lose this wick. If I were to now get rid of all this analysis to the left and we just mark out this wick over here, I can even get rid of the Fibonacci's. We've drawn out this wick. I'm now going to place another level of support over here. And so you can see there's this humongous area of support between that body and the lowest wick over here. So as we are in that daily candle, and we have inside that daily candle lost this support, technically speaking, you've now got a chance at continuing this downtrend if we could go ahead and close below $84.54. So we're trapped between $84.54 and $87.05. So basically, as we are below this, you would expect it to be resistance. However, as long as we maintain this low over here, 84.54, you're actually still creating high lows. I know that sounds weird because you can see with the bodies that this is up here 87 and right now we're below. And if it closed as it is right now with the bodies, we would actually be saying this is lower lows. But if we're looking at this wick, if we want to completely continue lower, go to the 80s, 70s or whatnot, you have to lose this wick. As long as you're above this wick, it's technically support. Look at this over here. We had the bodies up here, but look at that wick. That wick was holding us up. Eventually we lost it. Confirmed it as resistance, confirmed it as resistance. So that's why right here, this is still like a layer of defense. This could bring us back above $87. And if you can do so, then yeah, if we're climbing back above $87, this is a really positive because, yeah, we'd be reclaiming this previous wick that we will focus on at the beginning of this update. But again, as we are below this body and this wick, what Quant is now trying to do, what the market makers are trying to do, is get that continuation to the downside. And the only thing that's stopping that from happening and can give us a rally that reclaims these 2 levels is a close of the daily candle above this point over here. And again, the reasonings why we might get that, again, we're still above this point, so we're going to get a reaction just like we opened above this key area of support over here. So we could still get a reaction to close above. Sorry if you can hear my dog, guys. She's just snoring. Yeah, she's a pug. But yeah, other than that, that's pretty much it for today's update. I will get you targets to the downside if we do lose this low. Again, we were able to predict that we were going to run into trouble even after a few days of pumping and everyone getting excited again, that we're just pumping into a key area of resistance. And just like I said, use the wick over here. What I was able to do is use the wick from this point, no, it was from this point over here to that high over there, drag it across, and the level of interest for us was $92.40, as it's what should have held as support back in the past, but we can see we've used it as resistance. This is where I took shorts. And so again, we came up into that exact same spot. So that's why we're expecting $92.40 between 90.70 to 92.40 to hold as resistance. And that's keeping us in this downtrend basically. I had prepared you in case we ever reclaim 92.40, but we never got that scenario. We continue with the bearish scenario. And so if we were, just get rid of this now, measure this whole wave up, you can see that we are below the golden pocket as well as that 786 fib. That's why we'd need to reclaim 786 at 86.27 as well as $87 for us to have another go at coming back up, but knowing that 92.40 is what's keeping us bearish. And as long as we again close below this, we're coming and hunting for this low at 84.54, and on the loss of that we would come down to these set of targets as low as $79 to $82. So that's it from me today. Please don't forget to like, subscribe, comment. If you want to join my chat, if you want to do the course or the one-to-one mentorship plan, message me through the links in the description or head straight to the website. Cheers.